because all my podcast hosting, live market analysis are uploaded on my YouTube account. Most of the videos there are my sessions here in the Blue Guardian. Okay, so first let's have a recall of my previous analysis. Last October, last October 7, even though gold did not hit yet the 4,000 mark, I already forecasted it, announced it on my previous podcast that I was expecting that gold will hit 4K mark before it even happened. And then in that session, I mentioned that my targets are around 4,100 plus, but the market was so generous. We got at least more than what we more than what I asked for, and uh, I have uploaded the video of that here on my YouTube channel. So I'm going to give you some tips on how to, if a video is too long, we can use the help of AI. In my case, I'm using Edge browser, and I'll be using the Copilot for a quick summary of this particular video. So I have uploaded this 13 days ago, and then uh, I have shared some new ways of trading the market, especially if it is trending. And I mentioned how to use the uh, Gun Square. So it's a dynamic scalping using Gun Square. I hope if you have uh, if you were with us last session, perhaps you have applied it on your trading system. Now, going back to what I have said, the easiest way to watch an hour long or a long video is uh, ask the AI to help you summarize the video, especially if the video was uploaded, uh, let's say, for example, around 2 or 3 days already. Subtitles will be generated, and these subtitles will help the AI to give you a summary. So again, I am using an Edge browser, and then I'll be using this Copilot to summarize this video to give you some of the highlights of my previous analysis. So let's all you have to do is click this, summarize the video using the AI, and then AI will respond. It will try to extract the the subtitles of this video, and from there the Copilot AI will give you a highlight of the video that you asked to summarize. So here's the summary of our previous session. Uh, it's a deep technical analysis of gold and Bitcoin using Elliott Wave theory. Of course, I'm an Elliottician, and my main trading strategy is Elliott Wave theory. And then in this particular session, I have shared also on how to use the Gantt square. To be specific, a scalping technique, wherein you can a scalping technique that can be used dynamically, uh, and making your risk lower and reward higher. Okay, so I've mentioned here the the type of correction that I was expecting, and the expected or the uh, forecast forecasted price that will be reached by the uptrend. So here are some of the highlights. So if you want to be if you want to have a quick um, summary of the previous video, all you have to do is check the time stamps wherein I've mentioned some of the highlights. For example, the recap of my previous analysis, August 6 analysis, the triangle that I have explained, whether it's a WXY or an entire triangle structure at 17 minute mark. I already explained the Gann square strategy for dynamic trail stops, and then I've also uh, mentioned about the standard deviation using the standard deviation, the Elliott Wave way, and I've mentioned on how to find a good POI in plotting the standard deviation, the Elliott Wave way. Then after that, I've mentioned my forecast about Bitcoin. And um, if you will try to look at the current video now, during that session, I was expecting that the price will reach above 4,000 mark. I forecasted that it will reach the 4,000 mark, but my target is above 4,000, which is here around 4,181.65. This was projected based on the standard deviation, the Elliott Wave way. So if you want to have or to replay this video, all you have to do is check my YouTube channel wherein I uploaded all my previous sessions here in Blue Guardian. So what's from this analysis, what's the current situation now? I was expecting that it will create a new all-time high around 4,181, but what's the situation now of gold in terms of Elliott wave theory? Okay, all you have to do, or all I have to do now is go to the current chart, and as I've mentioned, let's start first a 4-hour time frame perspective. 4 hours time frame perspective, so that um, you will understand the market structure. Okay, so let me start with the structure that I've mentioned in my previous analysis. I treated this market as a not as a whole triangle, but as a WXY correction wherein the Y is a triangle. So let me just Y as a triangle. In other words, uh, this will be labeled as A, B, C, D, and E. So I will project it, or I will use this structure first for my projection or for forecasting, and then it will only be confirmed once we see the market, or once we see the market uh, test this particular level, which is at the price of wave D. I will only consider this as an entire triangle. When I say an entire triangle, I'm referring to this one. If I'm going to take this as an entire triangle, A, B, C, D, sorry, it should be this one. So I have there are two possible valid Elliott wave structure. It's either I will use a triangle like this labeled A, B, C, D, E, or I can use this valid market structure using Elliott wave theory as a WXY where Y is a triangle. So in other words, the point of interest for the uptrend would be at this particular price, which is the August uh, 20. I've mentioned in my August 20 or 19 podcast that I am expecting 5 waves up. Actually, I was just expecting around 3,600, but the market extended its fifth wave, and uh, which I will be explaining, which is the topic of my podcast for today. So let's start the counting from here to see and understand the current situation of the Bitcoin now, if or rather the gold now. Is this the higher time frame correction, or is this just a lower time frame correction? So from here to here, let's count the waves using Elliott wave theory. So this will be my wave 1, 2, 2, and then this will be my wave 3, 4, and 5. However, the the market did not do a correction after the fifth wave here. So what type of Elliott wave structure is this? This is called an extension of the fifth wave. When what is fifth wave extension or extension in Elliott wave theory? Extension in Elliott wave theory happens when, after completing all the internal waves of the waves 1, 2, 3, 4, and 5, and then after the fifth wave, the correction did not break at least the price of the wave 4, then the price cannot be considered as terminated already, or the trend is not yet terminated, meaning there is an extension that will happen from here as your point of interest going up. So since this is an extended scenario, I will not terminate the fifth wave yet, and will continue counting 5 waves up from here, from wave 4. So let me just change this first into a different degree, and then the fifth wave on of an extension becomes the wave 1. The fifth wave, since fifth wave is extended here, I will not label this yet as my fifth wave. Instead, I will extend it, meaning I will be counting 5 waves up again from this point of interest. So the fifth wave becomes the wave 1 of the extension. This will be the wave 2. This will be the wave 3, the wave 4, and this will be the wave 5. I will explain later what type of correction uh, is the gold making us. So, but before I will proceed with the current correction, let's have some review of the cardinal rules of Elliott wave theory. For those who are not familiar with Elliott wave theory, there are 3 cardinal rules in Elliott wave theory. For the information of everyone, the founder or this the one who discovered Elliott wave theory, Ralph uh, Nelson Elliott, originally called an impulsive wave as a cardinal wave. Again, let me just illustrate it so that you will have uh, you can visualize it. According to Ralph Nelson Elliott or Elliott, uh, there are 2 types of motive waves. One, as of the one is called the motive wave, which is impulsive motive wave. Impulsive motive wave, and the other one is a diagonal motive wave. Okay, the diagonal motive wave. What's the difference between these two types of motive wave or motive waves? In the impulsive motive wave, wave 4 did not retrace beyond the territory of wave 1. This is what we call impulsive wave. But when Ralph Nelson Elliott published his first book of the Elliott Wave principle, uh, he did not call this as impulsive motive wave. Instead, he used the term cardinal. Cardinal motive wave, cardinal motive wave. So instead of the term impulsive motive wave before, I mean cardinal motive wave before, we are now using the word impulsive motive wave. And that's the reason why there are three cardinal rules in Elliott wave theory. If we will use the term cardinal literally as its meaning, then one may interpret it as cardinal rules, meaning as sacred rules of Elliott wave theory. But the reality is that Ralph Nelson Elliott originally called the impulsive motive wave as cardinal motive wave. That's why the three cardinal rules of Elliott wave theory states that number one, wave 2 should not retrace the beyond the origin of wave 0. So if this is our wave 0, then therefore wave 2 should not retrace beyond that, or else the motive wave or the cardinal motive wave or impulsive motive wave will be invalidated. That's the first rule. Wave 2 should not go beyond or retrace beyond the territory of the origin of wave 1. The second cardinal rule of Elliott wave theory is that wave 3 must not be the shortest. So when I say wave 3 must not be the shortest, for example, if you want to check whether your wave 1, 3, and 5 or your wave 3 is not the shortest, all you have to do is use the price range here and then plot it from the beginning of, or the origin of your wave 1 to the peak of your wave 1. Then do the same for wave 3, origin of wave 3 to the peak of wave 3, and then do it the same with wave 5 from the origin of wave 5 to the peak of wave 5. According to the second cardinal rule of Elliott wave theory, wave 3 must not be the shortest. And in this case, the wave 3 in this illustration is 9.44%, while the wave 1 is 5.45%, while wave 5 is 5.79%. Therefore, this will satisfy the second cardinal rule of Elliott wave theory, which is uh, wave 3 must not be the shortest. So again, the first cardinal rule of Elliott wave theory is that wave 2 must not retrace beyond the territory of wave 0 or the origin of wave 1. Second rule, wave 3 must not be the shortest. Now for the third cardinal rule or cardinal rule of Elliott wave theory, wave 4 should not retrace beyond the territory or overlap the territory of wave 1. Because if that happens, if this particular price action happens, then we will no longer consider it as impulsive motive wave. Instead, we will call it as diagonal motive wave. A diagonal motive wave will only happen once the wave 4 retraces or overlaps the territory of wave 1. So in other words, let me use now the modern term impulsive motive wave. In other words, impulsive motive wave, wave 4 retracement will bounce above the territory of wave 1, and in diagonal motive wave, wave 4 will retrace or overlap the territory of wave 1, but should not go beyond the territory of wave 2 because it will invalidate the 5-wave uptrend. So that's the difference between the two. Now, going back to my analysis a while ago, the wave we have here wave 1, 2, 3, 4, and 5. Now, the in Elliott wave theory, uh, the internal waves of wave 0 to 1, 2 to 3, and 4 to 5 must be composed of 5 internal waves as well. In other words, if I'm going to, this is the higher time frame view, assuming that this is the higher time frame view, then the lower time frame view will give you fractal waves, and these fractal waves would be the internal waves of wave 1, 3, and 5. And it should be 1, 2, 3, 4, 5, and then another 1, 2, 3, 4, 5, and then another 1, 2, 3, 4, 5 here. The usual wave structure of an impulsive motive wave is 5, 3, 5, meaning 5, 3, 5, 3, 5, 3, 5 structure. Meaning 5 waves up for wave 1, 3 waves down for wave 2, 5 waves up for wave 3, then 3 waves down for wave 4, and then 5 waves up for wave 5. This can also be the, the structure for a diagonal wave. However, there is another wave counting structure for diagonal wave. And what would that be? Aside from the regular 5-3-5-3-5 structure, you can also use a 3-3-3 structure. 5 sets of 3 waves or 5 sets of ABCs. Instead of 1, 2, 3, 4, 5, 1, 2, 3, 5 as the internal waves of waves 1, 3, and 5 in a diagonal motive wave using the 3-3-3 pattern, we can use 5 sets of ABCs like this one. So therefore, the structure is called 3-3-3-3 pattern because the internal waves is composed of 5 sets of ABCs, just like this one. So that's the two types of motive wave, impulsive motive wave and diagonal motive wave. Now, the only difference between these two is that in the diagonal motive wave, wave 4 will overlap the territory of wave 1, but should not go beyond the territory of wave 2. Now, Sir Jack, what if the wave 4 did not retrace beyond the territory of wave 1? However, the internal wave structure is 3-3-3-3. As long as the structure is 3-3-3-3, or 5 sets of 3 waves go up, then wave 4 can be exempted according to the rules. As long as the structure is 3-3-3-3-3, wave 4 can bounce above the territory of wave 1. That's still acceptable if the counting is 3-3-3-3. However, if it is 5-3-5-3-5, then wave 4 should uh, retrace beyond the territory or overlap the territory of wave 1. So going back here, just like what I've mentioned, for us to confirm whether this is an impulsive motive wave or a diagonal motive wave, the internal waves here of wave 3 from 2 to 3 here must be 5 internal waves. And then later on, let's recall the cardinal rules of Elliott wave theory, whether it will satisfy the 3 rules that I have mentioned a while ago. So if this is wave 2 to 3, then therefore the internal waves must be completed. So in other words, there should be an internal wave counts for before we continue with the current uptrend. So let's check now. Again, what is the first rule of cardinal rule of Elliott Wave theory? Let me check on the chat if you can still remember what I mentioned a while ago. What's the first cardinal rule of Elliott Wave theory? Let me check the chat. Let's see if you are attentive and listening to the podcast for today. Okay, still waiting. Perhaps others are taking notes, so involving the audience will definitely help uh, in the learning process. Okay, according to the cardinal rule of Elliott wave theory, Illumi said wave 2 should not go beyond wave 0. That's the first rule of uh, cardinal rule of Elliott wave theory. So if this is our wave 2, obviously it did not go beyond the territory of wave 0 or the origin of wave 1. So therefore, this particular wave counting will satisfy the first um, cardinal rule of Elliott wave theory. And usually in Elliott wave theory, the retracement uh, the retracement levels for wave 2 is around 50% to 50% to the golden zone retracement 61.8% or 78.6%. But in a very bullish market, sometimes this level will only reach the 38.2%, which is the actual retracement level for wave 2 in this particular price action. Now, let's proceed now to, we have satisfied the first rule of Elliott wave theory, or the first cardinal rule of in Elliott wave theory. Now let's proceed to the second rule. Can anyone tell me the second cardinal rule of Elliott wave theory? It was mentioned already that the first rule states that wave 2 should not go beyond the territory of wave 0. That's correct. That's the first cardinal rule of Elliott wave theory. What's the second? Wave 3 should not be the shortest. Okay, wave 3 should not be the shortest. I can see Illumi answering the two rules already. Let's see if we can have if we will satisfy that rule in Elliott wave theory. Wave 3 should not be the shortest. So let's measure it from the wave 2 to the peak of wave 3 here, and then from wave, and let's measure as well the wave 1 from wave 0 to wave 1. As of now, the wave 3 cannot be is not the shortest among the first wave and the third wave. And let's just illustrate or show the measurement of the wave 3 or wave 5 I mean. So by simply looking at these measurements, wave 3 is not the shortest. So we have satisfied the first rule, which is wave 2 should not go beyond the territory of the wave 0. Second cardinal rule is that wave 3 must not be the shortest. Now, to check whether we have satisfied all the rules, cardinal rules of Elliott wave theory, what's the third rule that I'm going to check whether this will satisfy the cardinal rules of Elliott wave theory? Wave 4 cannot overlap wave 1 according to Elson. That's correct. And let's see if wave 4 did retrace the territory of wave 1. The territory of wave 1 or the peak of wave 1 is here and our wave 4 is here. Then therefore we have satisfied the three cardinal rules of Elliott wave theory. First rule, wave 2 should not go beyond the territory of the origin of wave 1 or the wave 0. Check for that. Second rule, wave 3 must not be the shortest among the the waves 1, 3, and 5. That's satisfied as well. And then the last cardinal rule, wave 4 should not retrace beyond the territory of wave 1. Since we have satisfied all the three cardinal rules of Elliott wave theory, therefore this is a valid wave 3. So if this is a valid wave 3, what will happen now? Next, all we have to do is count 5 internal waves again, going to wave 5. Once we completed the 5 internal waves, then therefore that's the only time that we can say that the correction may happen already. But let me just go back here and uh, uh, tell you that diagonal motive wave can only happen either on the internal waves of wave 1 or the internal waves of wave 5. And we call it as leading diagonal if it is the first wave. If the diagonal motive wave happens in the first wave, we call it as leading diagonal. And if the diagonal motive wave happens in the fifth wave, we call it as an ending diagonal. But please remember this, diagonal motive wave can never happen, should not happen in the internal waves of wave 3, this one. That's why I've mentioned all the cardinal rules of Elliott wave theory a while ago, and we check it, and it must satisfy all those three cardinal rules of Elliott wave theory. Because wave 2 to 3 in an impulsive motive wave should not, or the internal waves of the wave 3 should not have a diagonal. And obviously, this is not a diagonal motive wave, so therefore we have satisfied the rules, the strict rules of Elliott wave theory. Now that we have here the wave 1, the wave 2, the wave 3, and the extended wave 5, after completing its internal waves, the next thing that we're going to do will be, in Elliott wave theory, after the 5 waves up, the next structure would be a correction. And that correction, the simplest correction would be an ABC. An ABC, it can be a simple zigzag, meaning when we say simple zigzag, so for example, simple zigzag like this one. So if it is a simple zigzag like this, the usual corrective structure would be, or internal wave structure would be 5 waves down for wave A, 3 waves down, 3 waves up for wave B, and then 5 waves down for wave C. So this is what we call a zigzag correction. So if the structure is 535, then it's called zigzag correction. Now, the other type of correction, if the if you if the correction becomes extended and it created two sets of uh, zigzag, then we call it as a WXY correction. And what is a WXY correction? Or a double, sorry. What is a WXY correction? Let me just illustrate it first. So a WXY correction is actually two sets of zigzag like this one. So instead of labeling it as A, B, C like this one, you will label it as W for the first set of zigzag, then X for the intervening wave here, and then Y will be the second set of zigzag. Usually for the wave X here, it's just at least 3 waves. Or it can also be a lower degree WXY. So basically, that's the difference between the two. A zigzag is 535 structure. A WXY or a double, like this one, an Elliott double combo wave would be labeled as WXY. And let's just call this as WXY so that you will easily remember based on its plotting. WXY correction. So now, not only these are the possible corrective structure after the fifth wave here, there's also what we call expanded flat. And what is that expanded flat? Let me explain what is expanded flat. Expanded flat is like this. We have we have after 5 waves up, I mentioned that the correction may happen after the internal waves of fifth wave is completed. And usually the the pattern or the corrective structure is like this. Most commonly you or most common corrective structure is a zigzag or a 535 like this. And when the correction becomes extended, we upgrade the zigzag into a double zigzag or a WXY correction. Now, however, there are times wherein wave B will sweep the high of the fifth wave. And when this happens, we'll sweep the high of the fifth wave like this one. And when this happens, we will consider it as an expanded flat. Expanded flat. Now, what's the difference between an expanded flat to a zigzag? In the zigzag, the structure is 535. For the WXY, the structure is double zigzag, meaning 535, 35, 35. So 535, 35, 35. Two sets of two sets of 535, and the intervening wave X is composed of 3 waves. Now in the expanded flat, it's like a zigzag, but not actually a zigzag because since the wave B retraces or sweeps the high of the fifth wave, the counting would be 3 3 3 3 5. So zigzag is 535 structure. Double zigzag or a double XY correction is 535 3535. Two sets of zigzags. And then expanded flat when wave B retraces or sweeps the high of the fifth wave but did not sweep it impulsively, then we call it as expanded flat. The reason why I've mentioned this expanded flat is simply because this is the current um, corrective structure or correction structure of good, the expanded flat. Now let me illustrate this 335 expanded flat correction in the actual chart. So as I have mentioned, for it to be considered an expanded flat, the counting will be 335 and it should sweep the high of the fifth wave. Let's see if this is our fifth wave. Will this sweep the high of our fifth wave? Let's check. So let me use this one. Then to double check, let me use the price label or price. yes, the price label. So this is the high, or this is the fifth wave, and this is the all-time high price at 4,381.33. Obviously, if this is our fifth wave, we swept the high of the fifth wave, and that's one of the conditions for it to be considered an expanded flat. Now, to confirm whether this type of correction is really an expanded flat, then therefore the wave counting structure should be 335. Now, from 4-hour time frame, let me change now into 1-hour time frame for us to see it clearly. Or let me just change it into 15 minutes time frame. Okay, the first condition is that we sweep the high of the fifth wave, and obviously from the high of the fifth wave, which is at 4,379.54, we now have 4,381.33, sweeping the high of the fifth wave here. So that the first condition is satisfied. Now the second condition to check whether it's really an expanded flat or not is the wave counting structure, which is 335. Now here, let's see if it is really 335. We have A, B, and then we have the C here. And then we have another A, B, C. So we have that 3. ABC is considered as 1, 2, 3, ABC. Then 1, 2, 3, ABC. And now we are on the fifth, or the last wave counting, which is 5 waves. So therefore, if this is an expanded flat, then the last wave, or the wave C, should be composed of 5 internal waves. And let's now check whether we have completed the 5 waves, the 5 internal waves already of the expanded flat. So let me just change this into this. Okay. So to confirm whether this expanded flat possible correction is completed, wave C must be composed of 5 internal waves. So from 1 hour, let me change it into 15 minutes. Since it's not so clear yet, the waves are not so visible in the 15 minutes time frame. Let's use the 5 minutes time frame. From here, it's now quite visible. So therefore, let's start counting from the top, from the all-time high of a possible expanded flat scenario. So from here, this is a leading diagonal. As I've mentioned a while ago, leading diagonal is a motive wave wherein wave 1 retraces, or wave 4 I mean, retraces beyond the territory of, or overlaps the territory of wave 1. So to illustrate, this is the first wave of the 5 waves that we are expecting in the expanded flat scenario. So here in this case, it's obvious that the territory of wave 1 was overlapped by wave 4, which makes this as a leading diagonal. So this is a leading diagonal. Therefore, we will label this as the first wave of the first internal waves of the expected 5 internal waves down. So what will be the next? The internal waves of the third wave. We have here the wave 1, 1, then 2, 3, and then we can consider this as a triangle or a WXY, and then we have here the wave 5. So the internal waves of the wave 1 is completed. So let me label this as our wave 1. Wave 1, I'll change the degree later. Wave 3, 4, and then 5. So therefore, we have completed the internal waves of the wave 1 here, this one, 1, 2, 3, 4, 5 as a leading diagonal. We have completed the internal waves of wave 3, and if we will check the cardinal rules of Elliott wave theory, wave 2 did not retrace beyond the territory of the origin or wave 0. Wave 3 is not the shortest, obviously here, and wave 4 did not retrace beyond the territory of wave 1. Since all the three cardinal rules of Elliott wave theory are satisfied, then therefore this is a clear impulsive motive wave 3. Here, the bounce up can be considered as our fourth wave, and we are now approaching the fifth wave of the wave C of an expanded flat scenario. Meaning, I'm still expecting that the price will break the low of the Asian low. It will still break the price of the Asian low and complete the 5 internal waves of the wave 5. So in Elliott wave theory, if I want to to check whether the internal waves of the fifth wave, or if there is a reversal already, then I must complete the 5 internal waves of this fifth wave here. Of course, the fifth wave will likely be a point of interest based on the trading strategy that you're using. If you're using, for example, supply and demand or support and resistance, then find a support and resistance, or find a support here that will that is in confluence with the current Elliott wave counts, or find a supply that is in confluence with the Elliott wave counts. Or if you are a volume profile trader, for example, you can just use or change the time frame and then probably add the a volume profile indicator. In my case, I'm using this one, and then here is the possible in the 1 hour time frame based on the volume profile. The point of interest is within this price, which is was actually visited or was not yet tapped. So it was not yet tapped. If we will base it on the volume profile point of interest, so there's a possibility that this point of control of the volume profile will be revisited. If this can also be a good POI or point of interest, so it's either this one or this one for the fifth wave of a possible expanded flat scenario. Now, Sir Jack, what will happen now once we see a reversal from a possible, excuse me. Now, Sir Jack, what will happen now once we have completed the internal waves of the fifth wave here for a possible expanded flat scenario? Then we are expecting a new all-time high price again. But what will be the invalidation, Sir Jack, of your expanded flat correction scenario? The invalidation actually is the risk is very high in this particular in this particular, what you call this, uh, impulsive scenario. Why? Because the invalidation in Elliott wave theory would be around this price, which is the possible wave 1, because this wave 0, from wave 0 here to the fifth wave here, can be considered as an impulsive wave 3. So just like what I've mentioned, the invalidation of a wave 4 retracement is above wave 1 for an impulsive motive wave. So therefore, if we're going to trade this using Elliott wave theory, then the invalidation of this expanded flat scenario would be at this particular price, which is 3,408, which is lower than uh, way lower than the current price of gold. So therefore, it's up to you to manage your risk. What I'm giving you right now is just the structure based on my objective analysis based on the strict rules of Elliott wave theory. So if you want to find a point or uh, an entry model, that would be sweeping this low here. I mentioned in my first in the topics to be discussed today that I will be giving you tips on how to use a statistical SMT or implied fair value gap. I have already identified some of the implied fair value gap here, and if my memory serves me right, I found an implied fair value gap at 15 minutes time frame because honestly, uh, I created a limit order here. Unfortunately, the the price that was taken is at 4,004.21 only, but the implied fair value gap that I have identified is at 15 minutes time frame. Now, if you're not yet familiar with implied fair value gap, you can use the indicator, excuse me, you can use the indicator ICT implied fair value gap by Lux Algo. And then this 15 minutes time frame that I have mentioned a while ago is this one. This is the implied fair value gap that I have identified and actually was my actual um, limit order this morning. I'm from the Philippines, by the way. That's why I have said this morning. Unfortunately, it was not taken. Perhaps at the last wave of the fifth wave here or the internal waves of the fifth wave here, this will be swept. Now, aside from the implied fair value gap that I have mentioned, you can also consider the using the idea of the smart money technique or the SMT. Here, I've already put a note on it. So if you are an SMT trader, you use SMT for your entry model, then the pivot that you would like to use for your possible SMT would be at this particular price of the silver. Remember that silver and gold are strong, positively correlated to each other. So that's why I have compared my chart into silver and find a money technique, or simply in divergence trading, we call it as a possible hidden bullish divergence. And how will that statistical SMT will happen? Of course, let's use first a regular SMT. For for the gold to create a sorry, for the gold to create an SMT with silver, then this particular price of the third wave should be swept. So let me just put a note so that you will easily understand. Gold price need to bounce or to break, I mean, to break here to form an SMT with silver. And in this case, that's the reason why my POI is still with the M15 implied fair value gap at 4,001.42. Now, so here, looking at the labels or the annotations I put, we can use this for SMT invalidation or SL. For example, if I'm expecting the price of gold to do a reversal here, then the gold must break this third wave's price and create an SMT to silver. And here in the silver's price, the price must bounce. It should not break this pivot of our possible SMT. So in other words, I'm expecting that gold will break the third wave's territory, and the silver will continue to go up while the gold sweeps the low of the third wave. Now, why did I call it as a statistical SMT? In there, since I've mentioned that gold and silver are positively correlated to each other, there are statistical tools that we can use to check the strength of that correlation. And that would be the correlation coefficient. So all you have to do is add the correlation coefficient. Eric is very much aware of this correlation coefficient because most of his analysis are based on the correlation. So here, I will use the correlation coefficient indicator and use the symbol silver. From here, for us to consider whether, for example, you are anticipating a valid SMT around here. So if it is a valid SMT around here, then the correlation must be strong. And in statistics, a correlation is strong correlation table. A correlation is strong, considered to be strong if we have the following values. Let me just check this one. Not this one. I forgot to save it. Okay, we can use this. Correlation coefficient scale. It is said to be perfect correlation if perfect positive correlation if the R value is 1. So that's perfect. But if it is 0.8 to 0.99, it's very strong positive correlation. If it is 0.6 to 0.8, it is strong positive correlation. But if it is 0.4 to 0.6, it's just a moderate positive correlation. If it is 0.2 to 0.4, it's a weak positive correlation. And if it is 0.0 to 0.2, it's a very weak uh, positive correlation. And to illustrate that, you can simply look at this scatter plot points, and you will see why it's called perfect correlation, perfect linear correlation. This one is almost perfect, but there are some points on the scatter plot points that are a little bit scattered, and then this one not compressed in the center of the distribution, and so on and so forth. So basically, if it is very weak, the scatter plot points uh, are scattered in your graph or chart. So going back to what I have mentioned a while ago, I will only consider an SMT that as a smart money technique or as an SMT or statistical SMT if and only if the correlation from the pivots are high. So to do that, all you have to do is use the price label. If this is the pivot of your possible anticipated SMT, look for the price on that particular pivot. In this particular case, it's 0.83. And if ever the gold's price sweeps this low of the wave 3 here, check its uh, correlation value. If the correlation value is above 0 0.8 to 0.99, then that means that SMT or smart money technique is a very strong smart smart money technique or divergence. So that's one of the criteria I use in trading gold, and I will only take an SMT if the correlation is positive or at least uh, very strong, which is zero point 0.8 to 1.0. Obviously, if it is 1.0, it's a perfect correlation. I can still take SMTs whose correlation coefficient or R value is zero point 0.6 to zero point 0.8. However, before I will take that trade, I need to use other confluence. And that confluence could be uh, the point of control of a volume profile, for example, or an implied fair value gap that was found within that point of interest of mine, or I can also use the Malaysian SNR, or I can use simple demand and supply and demand, or support and resistance. So that's the third part of my explanation or my session for today. The last part would be, allow me to extend 1 more minute or 2 more minutes, would be the situation of Bitcoin. To give you an idea of what's the possible corrective structure of Bitcoin, I will not be explaining the wave by wave analysis, but I will just show you the my previous analysis done live
Well,
in a community where I always visit now. So allow me to just fast forward or move my analysis based on the structure of the Elliott Wave structure of Bitcoin that I have identified. Actually, the structure of gold and Bitcoin right now is both X are using the same structure, which is an
the
expanded flat
fundamental
scenario.
motive wave and corrective wave.
Let me
However,
just
there
mute
are
this one. As you can see here, last when was this? Let me check the date. I have uploaded this 12 days ago. So I have uploaded this 12 days ago when many were still very bullish with Bitcoin. The price back then was around, let me check this video. The price back then was around 120,955 when I made this live analysis. And I've already identified the structure as an expanded flat scenario, which is coincidentally the same scenario with the gold right now. Since the wave 5 was swept and then the structure is 335, then therefore wave B to C must be 5 waves down. And to check whether we already have the 5 waves down, this is the first wave, the third wave, and this is already the possible fifth wave. So if ever the market will bounce above this one, the market should not create a new a low or below 103,604.99 for it to be considered as a bullish already. So we have here the expanded flat scenario. To illustrate it quickly, let me just label this as this is wave 5 by the way, or wave 3 by the way. Then this is the A, B, C, A, B, C, and then the 5 waves down is for the expanded flat scenario. So we will see I already forecasted that the market uh, will bounce at least 5 waves up to complete the possible ABC here. I forecasted it as 3 waves up first before I will consider the other scenario, which is a possible 5 waves up. Of course, I base it on the CME gaps as well of Bitcoin. And if I will base it on the higher time frame scenario, then this will be the possible, not this one. This is BTC dominance. By the way, I'm expecting for the BTC dominance to create a wave B here, and then after the wave B here, 5 waves down, this could be the start of a possible short-term alt season. But what I mentioned a while ago is the CME future CME gaps, which is actually the ticker is BTC1 exclamation point. And if I will continue with the expanded flat scenario, these are the extended rectangles here are the possible gaps that will be revisited, CME gaps. And if ever the 5 waves down is not yet, or the wave C of the expanded flat is not yet completed, then therefore we have here a possible bounce at wave 2, and then it will continue to go down and probably visit the following gaps at 103, 305, 103,305, or the gaps or the gap at 96 to 97,000, or the worst case scenario will be the gaps that can be found at 91,660 to 93,915. So that is the my analysis with gold and Bitcoin. I hope you have learned something again, something valuable again today, and I hope you consider it in your trading system. So that will be all. Let us now proceed to the giveaway. Let me ask Genesis to give me the numbers to be generated from the my random generator. 63. Thank you, Mark. 1590. Thank you, Eric. Thank you, Ashton, and the rest. Let's proceed now to the giveaway. 63 is the number, so allow me to use the random generator only. Random number generator, and minimum is 1, maximum is 63. Let me just check.